Thank you very much, Rick. And thank you everybody for attending today. Dan and I have both spent a lot of time on these PPP loans. From the beginning, we're trying to figure out how to apply for them, those types of things, to where we are now. And I'm sure everybody can appreciate there's been a lot of changes, a lot of ups and downs, and a lot of reconsiderations you had to do during the way. So hopefully as we're going through this, we can help clear some things up. We are going to take questions as we're going through this. So as Rick sees them and thinks they make sense to ask, he will pipe up, and then also at the end, we'll try to catch up with anything we might have missed, kind of going through it. So don't hesitate to kind of reach out. We're here for you, and want to make sure you guys find out what you need. And I'll also say that we'll have our information up again at the end. If you guys think of things, after this or other things come up, don't hesitate to reach out. We're both spending a significant amount of time on this, so taking some extra phone calls is not a big deal. And just in case anybody doesn't know about Sickage, my marketing person would not be happy with me if I didn't kind of bring this up. But Sickage is a national accounting and tax firm, accounting and tax and advisory services, which include IT consulting and those types of things. Our Northeast Ohio offices is located in Akron. I've got about 1,800 total M&D clients nationwide. We have probably about 15 people within the firm that have become either PPP loan or CARES Act specialists during this time frame. And we do have on our website, if you want to go there at sickage.com, we do actually have a dedicated site to just the coronavirus type thing. So anywhere from IT and cybersecurity with people working from home to HR issues, to a lot of the PPP stuff. So we've done many presentations on this. And with that said, I'm going to go ahead and let Dan kick off this slide.
Thank you, Ray. We thought to start the presentation, it would make sense just to go into the PPP program, kind of all the rules as we know them now before addressing the Flexibility Act that was passed last Friday. So just as a little refresher, the PPP program is part of the CARES legislation, which went into law on March 27th. There have been additional legislation and changes since then that have both increased the amount of funding to the program, as well as changed the different rules and regulations in relation to applying for the loan, as well as what qualifies for forgiveness. The point of the program was to assist small business owners, and that's defined as businesses with 500 employees or less, with their payroll and then other fixed costs such as rent, utilities, and interest. They knew that with coronavirus that a lot of people's business would slow down. And so rather than having employers lay off their employees and claim unemployment, the goal of the PPP loan was to provide funds to enable those employers to keep employees on staff. The major benefit of the loan, in addition to having extra cash flow, is that there's potential forgiveness related to it. If the loan is spent in a required manner over what was 8 weeks, and as Ray will talk about, has turned into a 24-week period. One thing when the loan was still an 8-week covered period that caused a lot of frustration for borrowers is the constantly changing rules and the delay and how much guidance had come out. I think when the program initially came out, they had indicated that within 30 days they'll issue guidance on the loan forgiveness, loan applications, and everything like that. So that would have been April 26th. The most substantial guidance they issued was on May 15th when they issued the forgiveness application, and then an interim final rule addressing some additional items and questions relating to forgiveness. So if the loan period, the loan applications opened up April 3rd, guidance wasn't issued until May 15th. I mean, some companies were already 6 weeks into their 8-week covered period before they had any guidance as to exactly what qualified for forgiveness. This caused a lot of frustration. There were certain companies that were trying to use up all their funds within the 8-week period, that now that they have 24 weeks, they're out of funds, but they have 16 weeks they could have used them up over. So a few examples of things that companies were doing was maybe paying extra bonuses out to employees in the form of either hazard bonuses, giving raises earlier than normal, making more retirement contributions, or paying other expenses such as rent and utilities earlier, and to try and use up those funds. We'll address some of these items later in the slideshow here, but that is an overall general background. Ray, if you can go to the next slide. So in terms of looking at the forgiveness, the costs that qualify for forgiveness are broken down into two major buckets. I assume if you received a loan already and you've talked to your advisors, you have an idea of what's in these buckets. So I'll breeze through these slides here pretty quick, but we did want to give you a high level overview of what's included. The two buckets are payroll costs and non-payroll costs. Payroll costs are shown on this slide. Non-payroll costs will be shown on the next slide in detail. In general, for payroll costs, we're looking at gross salaries and wages. Gross salaries and wages do include bonuses or other general raises that happen during the 8-week, which is now turned into 24-week period. There are a couple limitations on the gross salaries and wages that can be included. One of them is you can't pay anybody more than an annualized level of $100,000 in compensation. So they didn't want employers keeping employees on and giving them huge bonuses or huge amounts during this covered period in order to maximize forgiveness while laying off other employees. So during the 8-week period, this $100,000 limit, if you take 8 over 52 times 100,000, that equaled 15,385. Our thoughts are that's going to go up to $46,000 now, and that exact number here is later in the slides, but we're still waiting on guidance to confirm that. Another exception to this $100,000 rule is that for owners' employees, their compensation is capped at either the lower of the $15,385 or 2019 actual gross salary. So if somebody made, say, $60,000 in 2019, they can't all of a sudden boost their pay and be eligible for full forgiveness. They would have to take 8 weeks worth of 2019 salary to see what applied. Additional costs that are included as part of payroll are benefits such as healthcare, retirement, and then state taxes. Typically with state taxes, we see state unemployment taxes and some workers' compensation that qualifies. One important thing to note about these benefits is they're not subject to the $100,000 limitation. So if you have somebody that earns the $15,000 during the 8-week period, and then you also pay their benefits on top of that, the benefits still do count towards forgiveness. Within the benefits, some things that we were seeing in clients and our contacts doing was trying to make profit sharing contributions or other retirement matches during the 8-week covered period. That's not quite as critical now that it's 24 weeks, but it's still something that can be considered if you need to use up your funds. The last item for payroll costs are for self-employed or sole proprietors who file a Schedule C. So people who don't file a separate business return, but instead include that income directly on their 1040. For these individuals, it's kind of a unique circumstance because the amount of the loan is based on 2019 income and the amount of forgiveness is based on 2019 income. So for small sole proprietors that only have one person, the owner working for them, they were basically guaranteed forgiveness on at least 75% of the loan, since the loan was based on the same figures that the forgiveness was based on. With them, we're waiting on guidance. We're not sure if this 8-week covered period, since it's now 24 weeks, if forgiveness is based on 24 weeks of 2019 net profit or not. That's our assumption, but we'll wait for guidance to come out on that. Another major development that's come up in the past couple of months is the PPP guidance has been issued, is what expenses qualified, whether they have to be cash basis, accrual basis, and exactly how that works. The most recent guidance indicates that expenses can be paid or incurred, meaning that if you pay more than 8 weeks worth of payroll within the covered period, you could potentially include more than 8 weeks or what is now 24 weeks worth of expenses. As it relates to the incurred language, we'll talk about this a little bit more on the next slide, but in some instances, employers' payroll period is going to extend. It's not going to be a clean cutoff at the end of the 8 weeks. It might extend over a week or two after the 8 week period ends. So in that instance, you can still include the costs. You just have to make sure they're paid by the next payroll date, which from our experience, for most of our clients, it's not an issue just to continue paying payroll as they normally have on the same schedule. Next slide, please, Ray. One thing that makes this the payroll period a little bit easier to follow is that they came out with a rule that will simplify how the payroll is calculated during the 8 week or 24 week period. And what they call this is the alternative payroll covered period. The initial law indicated that the 8 week period started on the day the funds were dispersed for the loan. So the day that funds get into your bank account, that's when the 8 weeks starts to tick. In the interim guidance they came out with, they said, well, we know that the date of the funds are dispersed won't necessarily match up with the payroll period for a lot of employers. So what they decided to do is that if you have a bi-weekly or more frequent payroll schedule, so basically you pay every 2 weeks or every week, you can elect to calculate the payroll costs starting with the first pay period that begins after the loan disbursement. So if you got your loan proceeds on a Wednesday, the next payroll period doesn't start until Sunday. You can start the 8 week period for purposes of payroll costs on that Sunday. Next slide, please. The other major bucket of costs within the PPP program relate to non-payroll costs. These include rent on both real and personal property. So it includes rent on buildings, rent on cars, rent on equipment. The only exception is that the lease agreements have to be at market rent. So if you are renting a building from a related party, the rent can't be unusually high to allow you to get greater forgiveness. And then the agreements also have to be in place as of February 15th. So if you get the PPP loan, you can't go back and increase rent in order to maximize forgiveness. Other non-payroll costs include utilities, which is fairly straightforward. Those are telephone, which we would say include employee cell phone reimbursements in there if you have those, as well as gas, electric, water, and internet. One item within the utilities bucket that has caused some questions to come in is transportation costs are included as utilities. And from our understanding, transportation costs include fuel for vehicles. So not necessarily bus fares if you pay those on behalf of your employees or plane tickets or anything like that, but just fuel for vehicles the company owns. The last item that's included as a non-payroll cost is interest on mortgage and debt obligations secured by real or personal property. So similar to rent, these would include mortgages on buildings as well as mortgages on equipment. One important thing to note is these don't include principal payments on the mortgage or debt. So it's only the interest portion of the payments that's included during this 8 week period for forgiveness. Similar to payroll costs, the non-payroll costs also use the paid or incurred language, which allows for the potential to get more than 8 weeks worth of expenses in. In my mind, these are a little bit simpler or easier to understand where it comes to trying to squeeze more than 8 weeks in. I have a brief example here where if you got your utility bill for April at the beginning of May, after you received your PPP funds, you pay that utility bill, you pay May's utility bill in June, and then you incur June's utility bill before the 8 week period is up and pay it by the standard due date, then you can effectively squeeze in 3 months worth of utility payments within that 8 week period. Similar rationale would apply to the 24 weeks. I'm not sure it will be as big of an issue. I would think that most companies would have enough expenses within 24 weeks to maximize forgiveness. So the 8 weeks this expenses must be paid or incurred was really more important language for the 8 weeks. That example with utilities could also apply to rent in the case that you can squeeze more than 2 months worth of rent into those 8 week period. Next slide, please.
And excuse me, gentlemen, did you see the question in the chat box? It says, if an employer reimburses employees for internet costs during pandemic-induced remote working, could that be included as a utility cost?
There's not any direct guidance to indicate yes or no, but my thought would be yes to include that.
I think the other clients we've been talking to would take that as an expense.
Great, thank you.
Okay, so after you figure out how many total eligible costs you have between the payroll and non-payroll costs we just discussed, there are a couple of different rules that might reduce the amount of forgiveness you have. One of them relates to full-time equivalent headcount. That's come out has indicated this is based on a 40-hour week. This slide here goes into the details of how to calculate that. Basically, you look at the weekly hours worked by each person, and then determine what your full-time equivalent headcount is. A couple of specifics on the calculation is if somebody works 60 hours in a week, that doesn't mean they count as 1.5 FTEs. Each person can only count as 1 FTE. To the extent they work less than 40 hours, you take the amount of hours they work divided by 40 and then round to the nearest 10th. So if somebody works 30 hours in a week, 30 divided by 40 is 75%. So you round that to 0.8. There's also a simplified approach that they put in to the regulations where instead of doing that calculation where you round to the tenths for each employee who works under 40 hours, you would just take one half FTE for each employee under 40 hours. So if somebody works 30 hours, they count the same as somebody who works 10 hours. Our suggestion is that if you are running into issues with FTE headcount, that you should calculate it both ways and see which one is more beneficial. One thing that we've seen out of the larger payroll processors is that they're coming out with reports to help you count and calculate FTE headcount. So that should significantly simplify the process if you have a payroll processor that's releasing those type of reports.
There's a question in the, it says, does the loan utilization and subsequent forgiveness have to be either 8 weeks or 24 weeks, or can it be any time frame in between? And if so, what is the impact on keeping your FTE on your payroll?
Right now, we're waiting on more guidance for that. But the way the language reads is that it's either 8 weeks or 24 weeks. So if you run out of money after 12 weeks and have to lay off employees, theoretically that counts against your FTE headcount for the final 12 weeks of the loan.
I was going to say, that's probably the #1 question that we're getting. Is, if I'm done after 10 weeks, and I just go ahead and after 10 weeks, unfortunately, like Dan said, there's nothing you can do. But one thing to think about is that the FTE requirement isn't as necessary. If you read the loan forgiveness application now that could change after this, but if you read it now, that you take your total expenses that you incurred during this 24-week period. And so the example I always use is, let's just say you got a $400,000 loan, and I'm sorry, a $300,000 loan, and during the 24-week period, you incur $400,000 worth of expenses. You're actually taking your FTE equivalent ratio against the $400,000. So if you had a 20% reduction in workforce, that would make that $400,000 equal to $320,000. So it's still above the loan amount. So as things are reading right now, it doesn't make it as important, your full-time equivalent ratio. But like Dan was saying, I think it's probably something you want to run the scenario to see what it looks like, to see if you're better doing it after 8 weeks versus 24.
And one thing within the new Flexibility Act that provides you with, I guess, a little bit more comfort as it relates to that is you don't have to submit your loan forgiveness application immediately after the period's over. So you don't have to make the 8 or 24 week decision. The forgiveness application just has to be submitted within 10 months after the period ends. So that's plenty of time that you can run through the full 24 weeks. And then, like Ray said, compare what your forgiveness would be based on the 8-week period to what it is on the 24-week period.
Okay.
Next reduction that could potentially reduce forgiveness is a reduction in salary or hourly wages for employees who make less than $100,000. If you reduce their salary or hourly wages by 25% or more, as compared to Q1 of 2020, then you'll take a reduction of forgiveness, a dollar for dollar reduction. One thing to keep in mind is this relates, the way the application works is it doesn't penalize you for employees who just got paid less because they worked less. That you would be penalized for that in the FTE headcount potentially. So they don't want to also penalize you for it in the reduction in wages. This strictly relates to an hourly wage change or an annual salary change that's 25% or more. From what we've seen, we have seen a lot of people maybe cutting back on hours, but for the most part, we haven't seen employers cutting their employees' pay by 25% or more. So this hasn't been a significant issue from our experience. There is an exception to this, to each of these reductions. And that is if you restore your FTE headcount and wage levels per employee to what they were as of February 15th by December 31st, neither of these reductions apply anymore. So Ray will talk about this in his slides a little bit, but the Flexibility Act changed that date from June 30th, which is quickly approaching here, to December 31st. So that results in a lot more flexibility for employers to rehire people or restore wage levels. So we don't see these reductions in forgiveness being nearly as significant as they once were.
Okay. All right. Thanks, Dan. So between probably most people on the call know that this was signed into law on Friday, June 5th. There had been a lot of talk about it. We were fielding tons of questions on what expenses counted. People were trying to maximize their loan forgiveness. Dealing with a lot of business owners that were struggling with, am I trying to maximize my loan forgiveness? Should I just try to run my business and save cash? What was the right way to go about it? And not that we did any kind of real poll, but it kind of felt like that maybe 10% of the people we work with were going to get full forgiveness. The other 90 were going to have some sort of loan after this. I think it's kind of flip-flopped. I think the ones that are going to end up with the loan, at least is how it's kind of written now, is going to be in the minority. I do think this 24-week period that they came up with has really opened things up when you go through it. So, we'll go ahead and go to the next slide. So one of the things that Dan's kind of been talking about a little bit is the change from 8 weeks to 24 weeks. And that is going to be a huge help. We've had some people say, if I'm at 8 weeks, should I go ahead and file for forgiveness and have it done with? And it's going to be a case by case scenario, whether that makes sense. Dan did mention, maybe you kind of wait and see what happens. I think that's a good idea. There's no time frame that you have to apply for forgiveness right away. So some of the conversations I've been having with people is, to get your full forgiveness in the 8 weeks, how aggressive were you with some of your expenses? And are you concerned at all when you do go for forgiveness? Are they going to get kind of kicked out? So, there's no discussion on if you go do forgiveness in the first period, at the 8 week period, and the bank says certain things aren't deductible, can you pull your application and apply again at the 24 weeks? We don't have guidance for that yet. And we're working off, the bill that was passed a week ago Friday. There's still going to be a bunch of guidance that comes out from the SBA. I've heard that the way they were doing a lot of their guidance was by FAQs, and I heard they have 30 FAQs waiting to come out. They were waiting for this bill to get passed so they could be tweaked to take into consideration. So that should be coming out giving more guidance. I'm not a fan of rushing in to get it done unless it's black and white. You know you're going to get full forgiveness. And I can't say there's too many companies in that position, but if you're lucky enough to be there, maybe it does make sense. But also maybe just a wait and see type of thing wouldn't be a bad idea. The 24-week period runs from the date the loan was originated, and the origination date is the date the money's deposited in your account. That's the first date the cover period starts. Can't be more than 24 weeks. It's either 8 or 24 weeks, and it can't extend beyond December 31st, 2020. And that wouldn't be a concern unless you still haven't gotten your loan yet. Last I heard, there was still about $50 billion worth of money that could be utilized. And so we've actually gone back, and some people that weren't too sure, that were self-employed, whether they could do it, they're actually going back now and trying to get some of these loans now that they have guidance that they can get it forgiven. So if you know somebody that didn't do it because guidance, or you guys have other entities or something like that, it might be something to think about. You still have until June 30th to get your application in. And Dan had talked a little bit about the salary. The limits still do apply. They didn't say exactly what happened with the 24-week period, but everybody's making the assumption that that turns out to 46,153 an employee. And as Dan mentioned, if you're an owner, it's capped at either that 46,153 or 24.50 seconds of the previous year.
Ray, before we head off to the next slide, we had a
Yeah.
question in the question box.
Yeah.
The question came up that says, when should we apply for loan relief?
Okay. So again, it's a case by case. So first of all, I think you need to coordinate with your bank. But because there is a loan application, and there could be a little bit more specific as far as the documents that you want. But pretty much you can apply once you get past, if you're going to use the 8-week period, for example, once you get past the 8-week period and you have the necessary documentation. And so some of the documentation they've been asking for are going to be your payroll records to confirm the payroll that was paid, and for the expenses, just confirmation, some sort of proof of payment, an invoice or something like that that shows where you got. I'm a big fan of everything neat and orderly when you give it to the bank, so there isn't a lot of back and forth when you go through. But it's pretty much up to you. As long as the bank has taken the applications, pretty much any time after your covered period is over that you're comfortable with doing. So that's when you can. Again, I'm one of those, unless you feel like you're ready to go and it's a slam dunk. I don't know if I'd be in a rush to do it, but just coordinate with your bank, and it should be pretty much any time after your covered period is over. All right. The other thing that changed, and hopefully this isn't as much of an issue for people now that you have the additional time period, is that previously you had a 2-year time period for the repayment of anything that wasn't forgiven. And what that was is that was 6 months deferred from the loan origination date, and then 18 months of a amortized loan to make the rest of the payments. They have extended that to 5 years to go through, and it also extends the date of when that loan starts. So previously it was just 6 months. Afterwards is when it started. One thing I forgot to mention is once you put your loan application to the bank, they have 60 days to approve it or get through the process to get that approved. So the process really shouldn't take that long. Now, if you're over the $2 million mark of a loan, it might be a little bit more because the bank has to approve it, and then it has to go to the SBA. And right now, other than the SBA saying they're going to audit loans over $2 million, there's no definition of what that means or how long that's going to take. But that part of the process, I'm assuming, is going to be a little bit of a drawn out process just because of the number and the staffing that they have at the SBA. But kind of getting back to the loan, so it will start after you get notification that you've gotten the forgiveness amount and what amount wasn't forgiven. So it just depends on when that happens for if you have a loan after the forgiveness period. Another thing that changed, which is beneficial to the borrowers, is Under the old rules, the other expenses that Dan had been talking about were limited to 25% of the total loan. So there were times that, you know, companies had more than 25% worth of expenses that wouldn't count. They've changed that to 40%. So instead of being 75-25, it's 60-40 when you go through. So hopefully that'll add a little room as far as what you can go through. And then again, it shouldn't be as much of a concern. And when it first came out, when this bill first came out, because the language wasn't the best, there were a lot of people questioning, well, if you didn't get 60% of the loan in payroll, is any of it forgiven? And there was a way to interpret it to say, basically, if you didn't hit 60%, then none of the loan was forgiven, kind of referring to as a cliff, so be it. And so they came out, the SBA has come out and said there is no cliff. So you do not have to hit that 60% in order to get partial forgiveness. So if you're at 50% or something like that, then you will get partial forgiveness. You can still get partial forgiveness. The full-time equivalence test that Dan was talking about was pushed back to December. If you use a 24-week period, is pushed back to December 31st. So if you're able to get of your employees back or included in there as of December 31st, that full-time equivalent ratio will be removed going through. And so that's something to think about. If you're unable to do that as of June 30th, that might be another reason to wait to the end of the year. And then again, we're kind of still waiting on additional guidance on this. There's been a lot of questions as far as, you know, what does that really mean as of December 31st? Can you just bring everybody back on December 31st, terminate them on January 1st, and you're going to get the ratio removed? So we're still waiting on guidance behind that. But kind of the example I gave before, as far as with this 24-week period, that you're able to have more expenses, so maybe the full-time equivalent test isn't as important as it was at one point going through it.
Ray, before you go to the next slide, we had another question pop in.
Yeah.
The question reads, we received our PPP loan on April 10th. Our first payroll paid after that date was April 17th. It was for work performed from March 30th through April 10th. Would our total payroll paid on April 17th qualify for forgiveness? And is this considered the alternative payroll period approach?
Do you want to cover that one, Dan?
Yeah, so as the guidance reads now, yes, the full payroll paid on the 17th would qualify since it was paid during the covered period. It's not necessarily the alternative payroll period approach. If you wanted to look at that, you'd look at the first pay that started after you got your money on the 10th. So you'd look at the payroll that would have started on the 11th. But yes, from our understanding, this is one of those instances where you could potentially get more than 8 weeks or 24 weeks worth of payroll since you paid a payroll during the covered period that wasn't necessarily earned during the covered period.
Yeah, one of the things I kind of talked here at one point is just before you do the loan forgiveness application, make sure you get a refresher on what the current guidance is. Because as everybody knows, and you're seeing the emails and everything kind of flying around, that this stuff is changing on a daily basis. So just make sure before you submit that you've kind of run the current guidance. And I know that with the loan, the initial loan application, the guidance didn't change after the loan application. Some people have already been approved, and the SBA had come out and said, you know, if you applied under guidance at that time, then you're okay. So you don't have to change your loan amount because guidance afterwards came out and said you couldn't do that. So, so it's like I said, just when you go in, make sure you check it out. If it changes after you apply, then so be it. Hopefully they have the same attitude. Now, something else they changed with this act had to do with, you know, we were getting a lot of questions as far as with full-time equivalents, you know, what happened if, you know, somebody quit, what happens, somebody retired, those types of things, and how do I get back to my full-time equivalents? And initially it was there was no definition for any of that stuff. It was purely your full-time equivalents in the base period compared to your full-time equivalents during the cover period, and that's what you had to work with. And when the loan application came out, they had some exemptions there, which I have on the next slide. But when it came out with the with this Flexibility Act, they actually added a couple more situations where kind of a called a get out of jail free card or whatever you want to call it, but basically it allows you not to get back to that full-time equivalent number. One is an inability to rehire individuals who were employees as of February 15th, and the inability to hire similarly qualified employees. So if you're trying to find somebody, and again, you probably want to look at documentation if you're going to take that route. So an inability is if you try to hire them back and they said, no, I'm not coming back, documentation that you tried to do that, and also some sort of documentation that you actually try to go out and find other people. So if you put something online or whatever you did, make sure you have some documentation showing that you did that. And then number two, I think, which is probably the biggest one of what we have here, is the inability to return to the same level of business activity. And this is due to the borough needing to comply with requirements established by the CDC or government agencies. Basically, shutdowns, social distancing where people need to separate it apart. You had to be closed in order to get, all the safety measures in place, those types of things. So that kind of falls into this bucket. So if that's your issue as far as not being able to hire people, this again is something that can help you get around that full-time equivalent test. And as I mentioned, there were a couple other that came out. So the first four came out on the application that came out, I'm guessing 2 weeks ago. I can't remember anymore. But of reasons you may not be able to get back to the full-time equivalent base period, but also you're not going to get dinged for it when you're doing your forgiveness. One is if you fire somebody for cause. Again, make sure you document this type of stuff. Somebody voluntarily resigned, and I will put it in there also, retired, those types of things in that bucket. Employee voluntarily requested and received a reduction in their hours. Now, the next two we're probably going to need a little bit more guidance on, because the fourth bullet here came from the application, and the fifth bullet came from this Flexibility Act. One says an employer offered in writing to rehire employee, but the employer refused. So if you look at that, this is a situation, I tried to bring you back. You said, no, I'm not coming back. From that standpoint, there's nothing more you need to do. If you look at the next one, it says an inability to rehire individuals and the inability to hire similarly qualified employees. So that's making it kind of like a two-step. I don't know what trumps what. Again, this is probably something we're going to get some more guidance on later on, which one works. But they both have been sent out in guidance that they use. And then again, the last one is the inability to get the same business activity for safety reasons or the government agency. Another avenue that they've come up with that may help from a cash flow standpoint, and this is one I personally am not a big fan on. And so initially, when there is a payroll tax deferral, and the way that payroll tax deferral works is 6.2, or basically the employer's share of FICA. You can defer basically from March through the end of the year, pay half of it back at the end of 21 and half of it back at the end of 22. What happened with that, that's something you could do, but then you couldn't do it if you took a PPP loan, and then then you could do it after the PPP loan forgiveness amount was determined. So let's just say that happened July 1st, you could do it July 1st through December 31st. They've come out now and say basically you can do it. So this is it's a short-term loan, working capital. I believe there's no interest on this. Part of the reason I'm not a fan of it is because I've worked with a lot of companies in the past that got into payroll tax problems, and it's not good if that happens to go through. One is the penalties on them for late payments are huge, And I'm not an attorney, but my understanding is it doesn't go away in bankruptcy. So if you end up having an issue, so I guess I would just be a little bit more careful on this if you're in a situation where you're really worried about cash flows, and maybe filing for bankruptcy might be something potentially that might happen in the future. So I would just, again, you can do it. And it could be a good source of cash flow for now, but again, you just have to just be careful with it. And so this is, I think Dan talked about this a little bit. It's actually one of the questions. It basically says you can still use the 8-week period. And we mentioned, look at the two different ways, see which one is preferred, which one is you're better off with. And it does not provide an option for between the 8 and 24 weeks. But as I mentioned before, this is by far the #1 question we have gotten. Can I do it at 10 weeks? Can I do it 12 weeks? And so I think there's a lot of people pushing the SBA to see what they're going to come up with. I'm sure the banks would love to have it, not have all these cliffs and be able to take them in on a certain amount of time. And also, if you end up going with the 24-week, it could cause some issues. And I don't know if it's a timing issues. So one thing to think about, if the 24-week period gets towards the end of the year, and then you're going to the bank, and the bank doesn't get back to you until February or something like that, with the forgiveness amount, it might be hard to finish up, your financial statements. So if you get audited or reviewed statements at the end of the year, and there's some question about what the exact forgiveness amount is going to be, that might cause delay in getting your financial statements forgiven. And also for the year-end tax returns. So I think most people probably have heard that as it stands right now, the IRS has come out and said expenses paid with the money you received from the PPP loan are not deductible for tax purposes. And so initially this was to be, it was sold as, it's the forgiveness is tax-free, all those kinds of things, this additional capital going in. The IRS came back later and said, that's true, but you can't deduct expenses for grants and different things like that. Initially, there was some push to get that changed. I think that kind of subsided with everything to get this Flexibility Act through. It does look like it's coming back up. There are a lot of senators and representatives that feel that wasn't the intent. And they're looking to override the IRS on this, but it still needs some work in Washington, D.C. when you go through. But I also want to touch on the financial statements real quick, because we've got a lot of questions on, how do I show this on a financial statement? So when you look at it like this, is what we're telling most people is when you first get the loan, you're basically, it's going to be debit, cash, credit, the loan payable, pretty simple entry. We've had a lot of people say, well, should I be releasing the loan on a monthly basis when I close my financials to kind of show the other income and put it on the books? In my mind, it's a lot of work, and I'm not sure there's a lot of value there. So what we've been telling most people to do is just, wait till you get the forgiveness amount determined, possibly even wait till you hear back from the bank if you feel there might be some question on the amount. But just leave it on the books, and at the end, it's basically you get to, assuming it's full forgiveness, you're going to take the loan off the books, and it's going to be other income down below the line. So down where you have interest expense or interest income and those types of things, that's where you would that's where you have the other income down there. There's potentially, if you're really that interested, there is a potential for actually decreasing the expenses that they applied to. But again, in my mind, that's probably more work than it's worth. And I'm not sure if it really shows comparative years, but that's, like I said, the most common approach is going to be the other income. Dan had put this summary together, kind of stuff that we've been talking about, kind of the comparison before, what it is. Covered period goes from 8 weeks to 24 weeks. Again, you can still use either or. The change in the ratios, 75 to 25 versus 60 to 40. The maximum wages, again, we're kind of, and we're not the only ones doing this. Everything we're looking at, everybody's doing the same thing. If it goes from 8 to 24 weeks, it makes sense to triple the amounts, but there's really been no real No real guidance to say that's what's going to happen. Deadline for restoring the FTE count goes from June 30th to December 31st. The exceptions to FTE count, there were none in the original PPP, and kind of you saw the slide that we had that showed all those. Changing the deferral period, the term of the loans, and then also deferral of the payroll taxes. So this is probably a pretty good summary of the things that were changed with the Flexibility Act. So just some final comments on things to think about. As we mentioned multiple times, we're still waiting on guidance. Mentioned those 30 FAQs that are going to come out when we go through this, and they have to, and that was before the Flexibility Act came out. So I'm guessing there's going to be some more. Additional legislation is going to come out. One of the things that happened is there was a HEROES Act that passed by the House in mid-May. Probably not going to get too far, and it's not going anywhere in the Senate. I'm not sure. I think there definitely will be another pickup on this. So the HEROES Act included things like another round of stimulus checks to payers, and I think this one actually got up to $6,000 per household. So it's actually a little bit more than the initial one that had gone through. It was actually more for the dependents. I think the parents were still the same number. It was just more for the dependents, but covered things like it extended the unemployment benefits. The extra $600 got extended through January. Interest on the student loans, those types of things all got extended through January. And there's also things in there addressing, rent relief and also mortgage relief and those types of things. I think everybody's pretty confident that there is going to be another bill passed that has additional stimulus. But again, that one right now has been passed in the House, and so I'm pretty sure they're going to go back and change things. And again, just don't know when that's going to happen, if we're going to have bipartisan support. And so we're just telling everybody, be patient, wait around to hear what comes out. Again, the clients that we had and people that we worked with that were in a rush to kind of get the loan application at the very beginning. I think probably quite a few of the ones we looked at probably could have had a little bit more money had they waited for some further guidance to come out. Also, the economic uncertainty that people have been talking about, and when they came out and said, you start hearing about Shake Shacks returning money, those types of things. We had some clients, people that went ahead and returned money right away. They came out later and softened the language, and I think they kind of regret returning the money at this point. Not that they were doing anything wrong. They were more concerned about, getting in the news and people saying things about them as opposed to whether they really needed it or not. So again, you can always second guess, but had you waited and taken your time, I think you could end up in a better place. And I kind of feel that way right now with the loan forgiveness applications. I'm not sure if you want to be in a rush and be the first one going through the experience with the banks and things like that. So you want just want to make sure everything's covered with it. And then the other thing is, if there are anybody out there that does have a loan over $2 million, it is subject to extra scrutiny from the SBA, primarily around the economic need at the beginning. Issue was then when everybody filled out the applications, they were saying everybody had economic need, don't worry about it. Unfortunately, in the eyes of certain people, there were some applications that were made that didn't appear to be an economic need, whether they were publicly traded or what the reasoning was behind it. So just make sure that you're going through and documenting things. What we're telling clients to do is, if you have emails from clients or customers saying, we're delaying orders, those types of things, make sure you have that in your file. Make sure any projections that you had in your file, put those in there. If you actually end up laying people off because of this, have notes about that. And then also the backlog. A lot of manufacturers, when they look at this, they're project-based. So they may have not felt the impact at the very beginning, but 2 months into this, 3 months into this, all of a sudden their backlog's dwindling, and now they're having some issues. are more transparent than they were several months ago. So those types of things, just make sure you have documented and put together. And if you're over the 2 million, again, we look at it, the more you can put together. We actually have a checklist on our website if you want to take a look at that. But you know, the more you can have documented, the more that you hand the auditor everything at the beginning, showing you have a good argument, I think the better off you're going to be going through this.
Right, there was one more question that popped in. It was just a clarification. The person wanted to clarify that the second stimulus, as well as the unemployment and student loan forgiveness, is not extended or passed yet. And that's correct. It passed the House, but it's in the Senate. And as of right now, it doesn't seem that the entire bill is going to pass. They'll have to go back and forth on negotiations.
Yeah. And there's something, yeah, it hasn't passed yet. And there's some things, you know, as far as the unemployment, I mean, I know a lot of people weren't happy about the extra $600. We've heard a lot of clients have heartburn from trying to hire people. We actually have people that are trying to hire people and can't find them because of the extra $600. And there's also talk about maybe a bonus for going back to work and getting off unemployment. So yeah, that, as Dan said, it hasn't been passed yet, but there is going to be another round of stimulus. It's just when and what does it look like when it comes out. And I think that was the end of the slides that we had. So I don't know if there's any more questions, or, you know, as I mentioned before, our information's there. If you guys want to reach out and either email one of us or both of us or call us, that's fine. Yeah, answer any questions that way.
Yep, I do have one question here. It says, with the 8-week period for forgiveness in place, partnerships, including LLCs, were limited to the amount of payroll they could include in forgiveness to an amount equal to 8/52 of their 2019 net earnings from self-employment. Mm-hmm. If the 24-week period is used instead, does this limitation change? For example, to 24 of 52 of their 2019 net earnings?
So it hasn't been documented yet. So when the SBA guidance comes out, we fully expect that's what it's going to be. We just haven't seen anything confirming that. And so that's when we start talking about that, where we think it's going to be much, obviously with 24 weeks, it's going to be much easier to hit those bogeys. You need to get full forgiveness. Yeah. But yeah, it hasn't been, like I said, it's not out there, but we fully expect that that's what it's going to say.
Okay.
One interesting thing about that is that if you are a sole proprietor or a self-employed individual and you don't have any employees, if they change that period from 8 weeks to 24 weeks, you are basically guaranteed full forgiveness as long as the forgiveness is still based on your 2019 Schedule C.
Okay.
Yeah. So that was a little bit different. So a lot of small Schedule Cs we're worried about showing income. So for the Schedule Cs, it's just based upon 2019. And so it's going to be 24/52 of your 2019 self-employment income. So in that situation, I don't know how you could not get full forgiveness.
Right. Okay. Thank you. Are there any other questions that you wanted to put into the chat box? Okay, well, I'm not seeing any other questions. It is now 3:57, so we're going to go ahead and wrap up the call if there are no, never mind. It says, if a self-employed individual collected unemployment, can they still apply for a PPP loan?
Go ahead, Dan, you take that one.
Yeah, this is a question that we've gotten a couple of times. I don't see anything specifically prohibiting it. There's nothing that I find that says, yes, it's for sure allowed, but I don't see anything that prohibits it.
Yeah, and I 100% agree with you. I have seen the conspiracy theorists come out and say, well, are they going to go back and obviously with unemployment, you're getting your Social Security numbers there as along with the loan and stuff like that. I find it highly unlikely, and like Dan said, I haven't seen anything that said you couldn't do it.
And right now, I don't know how. I think the 6-month period opens it up a lot more, because you could have claimed unemployment for a month, went back to work, got the PPP and then utilize those funds.
Right. Okay. Well, I believe that's it. So go ahead and finish up the call. Thank you again, everyone, for joining us on the call today. And thanks again to Ray and to Dan for their excellent presentation. We encourage all of you to share with us your thoughts on topics you'd like to see covered in future calls, and we'll do our best to address them for you. Please stay tuned to your email as we announce our next call. And if there are other manufacturers in your network that you think would benefit from this information, please feel free to share this with them or let us know, and we'd be happy to reach out to them. As I mentioned earlier, this call has been recorded and an archived version will be available on our YouTube channel and in the COVID-19 resources section of our website. Thanks again, be safe, stay healthy, and we hope to see all of you very soon. Thank you.